There's market volatility today, a sell-off in stocks with this confrontation over Greenland. Our guest says volatility is an opportunity for investors. Let's bring in Eddie Ghabour, CEO of Key Advisors Wealth Management. Eddie, thank you very much indeed. And we've been exploring this theme already. Often these geopolitical events drive down stocks, but later turn out to have created an opportunity.
We think this time is no different. I think one thing we've learned from these tariff threats is many times they're just threats. We learned a valuable lesson last year in the U.S. markets. And I think this year is much different than last year. The markets came in to today's events very strong. So the fact that we have this big drop early this morning, I think is a real opportunity. And frankly, I think that by the end of this week, it would have been not only reversed, but be in the green. So we look at today as a buying opportunity because the setup here in the first quarter for U.S. markets is as strong as we have seen in decades in regards to the trade on the economy. We want to be in economically sensitive areas and underweight the AI trade. We think the rotation is real because we think the growth in the economy is going to accelerate to the upside. So we're looking at this volatility as your friend today.
What would you recommend to investors? Is there particular areas that you think are offering particular opportunities right now?
I do. Small caps are our favorite play right now. We use the ETFs to follow the small caps. We also like housing. There's a big commitment to housing. We've seen mortgage rates come down by nearly 100 basis points. Now, today, rates are up, so we'll see how that plays out. And then industrials as well as financials. Those four areas we think will outperform technology as well as the broad market itself.
You think there's a clear rotation going on now when it comes to tech, away from the Mag 7 stocks?
I do. The Mag 7 stocks are getting weaker and weaker. And I think what's happening is there's so much money in the Mag 7 is that money, that's where it has to get sold in order to rotate into these areas. So for investors, I think now's the time to be very active and not passive in your portfolios and not look at this rotation as a head fake. We do not believe it's a head fake at all. And the market is telling us that's the case. When you look at the difference of performance in the small caps versus the Mag 7 just last week and the week before that, that is a real outperformance. And we think that trend's going to continue.
Nevertheless, you do see opportunities in some of the Mag 7 stocks, including Tesla?
Yeah, so Tesla to us is one of our favorite Mag 7s because we believe there's going to be a blow-off top at some point in time. And Tesla to us is an AI trade, and we think that will get a lot of momentum. And so we do think that stock hits new highs here by the time we get to the end of February.
The end of February. But in the meantime, we could get, what you say, a blow-off top. We could get a big sell-off in tech first.
We think we're going to get a top in technology at the end of February and sometime in March. We think the second quarter will be very challenging for technology. But before we have that big correction in technology, you're going to get that blow off top where you're going to get new highs. Names like Tesla will have the most momentum in our opinion. And so I think you have to be very cautious in getting too excited and too concentrated in the AI trade going into the second quarter next year. But the economically sensitive areas, we are not concerned with that. We think those will continue strength and momentum.
Right. And just very quickly, Apple, what would your view be? Would you put new money to work in Apple right now?
We came into this year bullish on Apple, and we're very disappointed right now in the momentum in that name. So we still own it. We would not be buying it right now. We're going to wait and see what happens in their earnings call to see if what we expected on iPhone sale acceleration to happen. If we get disappointed in earnings, we will probably cut that position to some degree. So right now we've been wrong on that so far in 2026, but we're not giving up on it yet.
You have a name for us that you reckon is a higher risk play because it's tied to a housing recovery in the States. RH, better known as Restoration Hardware.
Yes, this name has gotten really beaten up, just like housing has. The last 3 years, housing has really underperformed, and we're extremely bullish on housing. And this is a more aggressive way to play the housing market. We think RH is a great name in that space with great management, and they have a tendency to really thrive when you have an economy in the housing economy that is accelerating. And we think that is what we're going to see. So on days like today, we would add to housing and housing-related stocks versus the tech play that we just recently spoke about.
What about crypto markets? You see an opportunity there? You think that they may be bottoming?
We do. We find it hard to believe that this market is going to accelerate in this first quarter and crypto not participate in it. But crypto has a very high tendency to follow technology. So it's not a surprise to us that it's been sideways to down. But we do think it is bottoming, and we expect it to really do well over the next 60 days. But when we get the sell-off in technology we're expecting in the second quarter, we would expect crypto to lead the way in that as well, too. So it is a trade, not a 6 to 12-month hold at this point in time.
We'd better go. Eddie, thank you very much indeed for joining us, as ever.
Thank you for having me.
Eddie Ghabour, CEO at Key Advisors Wealth Management.